In this video, I'm going to be talking all about my $10,000 plus Robinhood portfolio, what it took to build up this portfolio, my strategy behind it, and looking back, some of the things that I wish I did beforehand, some of the things I wish I knew when I was first starting out on this portfolio. If you guys are new here to the channel, my name is Dalton and you're on Dealits TV. I talk about all things investing on this channel. I do something called the Robinhood Challenge where I invest $100 every single week. I share with you guys my tips, tricks, and insight into the stock market. So if you're looking to increase the size of your portfolio, you're gonna wanna quickly jump down, click that subscribe button, and turn on the bell notification. You won't wanna miss the content I have coming out. I got so much of it, really excited for what the future brings. Now, just so you guys know, everything that I reference in this video, everything that I talk about will be in the description. They'll have all the links for it. And if you wanna get yourself a free stock on the Robinhood application just for signing up, then you're gonna wanna click the referral link in the description. You're gonna get yourself a free stock. I'm gonna get a free stock as well. And then you can also get 2 free stocks on Webull. And a lot of times with Webull, they have different promotions. And right now, I believe you can actually get yourself 6 free stocks if you use the referral link. So definitely stay tuned for that. Look out for that link in the description. And without further ado, let's jump into my Robinhood portfolio. All right, so like I said, this is my $10,000 plus portfolio. Right now, it sits at $10,667. And over the past day, I was able to make $52. Past week, we're up $64. Past month, looking pretty solid, up $695. 3 months, we're up $1,021. And over the past year, we're up $1,255. If I were to look back at myself when I first started investing in this portfolio, I would have thought it would take a lot longer to reach $10,000. Now, I'm really happy with the results that I've seen so far. And moving forward, I hope to invest more in the future, more in 2021. There's a lot of exciting things to come on that end. Now, one thing about me as an investor is that I don't options trade really. I don't swing trade. I don't day trade. I don't penny trade. I don't do any of these methods that other YouTubers seem to do. They have some success. I have tried it myself. I have not seen the same success. It's probably possible for people, but I think for most investors, it's a very hard, very time consuming to do. And if you even try it, a lot of times these people are getting burned from it. And I myself was one of those people. So I decided to switch up my strategy. I took a closer look and realized that I really enjoy investing in value stocks, in blue chip companies that have proven track records that I know are going to be sound for a future investment. So if you take a look at the screen right now, this is a snapshot of my portfolio. This is on trackyourdividends.com. Again, the link will be in the description, but you can see the portfolio value here is $10,676, up $886 total. And the dividend yield is 3.24%. My yield on cost is 3.54%. And annually, what I'm getting in dividend payments, because that is such a big focus for me, is $346. Now, scrolling through, looking at some of my holdings down here, you can see these are well-known companies. I feel like most, if not all of these companies, you're already gonna know. Apple is one of them, AbbVie, Ford, Johnson & Johnson, JP Morgan, Coca-Cola, McDonald's, Microsoft, like all of these are really well-known companies. They have a solid financial backings. And if I go to the second page here, you're gonna see even more. Pfizer, SPHD is my favorite ETF. It invests in high dividend but low volatility stocks. So if the stock market goes up, this is gonna go up as well, but it's not gonna go as high as the stock market. But if the market takes a downturn, it goes down really, really quickly. It shouldn't drop as fast or as much. So that's why I really like SPHD. It's my biggest holding in here. Then you can see I have AT&T, a little bit of the riskier play here, Tesla, and then VTI. VTI is a solid ETF that just traces the market. If you're just getting started investing and you're overwhelmed, you don't know what stocks to pick, you don't know what stocks to go into, I would highly recommend that you go into looking at ETFs because it offers a really, really great diversification. If you don't know how an ETF works, essentially if you invest in an ETF, you're getting an overall kind of basket of stocks. So a lot of different stocks make up VTI in this list. So when you buy it, the overall share price right now is around $190.87. But if you buy into it, you have such diversification that if one of the stocks that is in this portfolio ends up tanking, theoretically, the rest of them should make up that difference and the overall price isn't really going to be that much affected. So really, really cool stuff. Another thing that I love to do on this website here is check when I have upcoming dividends. If you go into your portfolio, you can get a really great view of what's coming down the line for you in here. And you can see that this is looking at 2021, what we're gonna get. and the next dividend payment that I should receive is around $21.44. My most that I will receive next year if I don't invest any more money is $44.25. Like I said in the beginning, I invest $100 every single week minimally, and then I reinvest all the dividends. Yes, this is $21.44 that is in my pocket. I will be paid this in the future, and what I do with that money is just automatically reinvest it back into these stocks, back into these companies for future growth. One of the biggest takeaways that I have from building this portfolio to around $10,000 is that you have to remain consistent with your investments. Now, one of the ways that I do that obviously is investing $100 a week, but even when the stock market was going down, I did not sell off my stocks. I did not panic sell. I held on, and I actually even bought more stocks when the market was dipping in order to drive costs down. So that way, when the stock market bounced back, I'd be able to make more money. So if you take a quick look, my portfolio, I believe, dropped around 20%. If I take a look, you can basically put two fingers on your phone on the Robinhood app to see what the percentage difference is. It's a little bit wonky. You can see it's having some problems, but yeah, overall, you can see right here, I'm around 16% down. It's a little bit higher. It's just hard for me to get my finger over there. 18% right there. So this really was scary for me. This was really the first time I saw my investments dip, something like that, because in my entire life, pretty much when I started investing, when I hit the age of 18, the stock market's been on the up and up. I haven't had to worry about my investments going down really. So this was the first test. And a lot of this was due to the COVID stuff going on, and the market was just, there's a lot of uncertainty, but I was able to capitalize, I was able to continue investing, and that really proved to be one of the main reasons why I was able to grow my portfolio to this value. So if you guys didn't know, Robinhood has the functionality to automatic deposit money into your account. So if you go into your settings here, you drill down into transfers and you go to transfer to Robinhood, you can set up an automatic deposit by clicking on that button there. And then essentially you can set up the amount of times that you want it to go in. So like I said, I do weekly. So if you wanted to schedule a weekly deposit, you go set schedule, and I did $100. I could review that and submit. Now, obviously I already have it set up, so I'm not gonna redo that, but in the future, I'm looking to increase that value in 2021 so I can try and double, if not triple, this portfolio in the upcoming year. And just to prove to you guys how quickly things really start to roll in, if you look at SPHD, which is one of my biggest holdings, and I drill down into the statements and history here, and I look at the past dividend payments, you can see where it really ramps up. So I put around $1,000 in SPHD when I first invested in them, and I was getting around a $3 dividend paid to me every single month. That's what's really interesting about SPHD, is that they're a monthly payer, so you get this dividend income every month, and you can count on that coming in. So it started off around $3, and right now, every single month, I'm getting an extra $8.33. Now that's from SPHD alone. Obviously, there's other companies that I am investing in, like Realty Income, which just so happens to be another monthly dividend company. This one will be even more interesting. If I drill into the history here, you can see it really started as a very low dividend payment. I'm going to sort it by dividends here. So today it's $3.97 every single month. Started out as $1.13. So it really takes time to build this up, and you might be thinking, oh wow, you're getting around $8 on the last one, $4 here, 12 bucks. I mean, what are you going to do with that? Well, here's the thing. If you reinvest that money, it's where the compound interest, the compound growth also comes into play. So your portfolio, though it might seem like it's not doing much now, later on, as you hold, as you don't sell off this portfolio, as you add on to it, that dividend income is just going to continue increasing and increasing and increasing to where eventually it would be able to pay all of your costs so you could live financially free. And that's the exact goal that I have in this portfolio here. That's what I look to set up. And that's one of the main driving factors to why I plan on investing a lot more in the near future. Now, I was recently asked the question, what type of investments do I see myself making in 2021? And I decided to put a little bit of legwork into that question, see if I could figure it out, answer it real briefly in this video here. I'll go into more depth on this in another video. So if you want to stay tuned, make sure you're subscribed to the channel and you have that bell notification on. The bell notification is the most important part so you can be alerted when the video comes out. But this graph right here comes to us from FactSet, which essentially is showing that analysts are predicting a 12% return in the stock market over the next year in 2021. But it also shows by industry, by sector, which ones have the most potential for growth. And you can see energy is an absolute bombshell of an investment to make, according to analysts on this website, over the next year. followed by healthcare and financials as the top 3. So that's really where I look to aim and focus my money in the upcoming few months here. I really want to boost up my holdings in these particular industries, and you don't want to be too set on one particular industry or just a few. You want to really make sure that you are diversified, but these are the 3 that analysts are saying are going to be booming. And here's the thing, you don't want to copy exactly what I'm doing. You don't want to just take the investments that I make and blindly throw your money into the stock market. It's actually how you lose money. And I'm just some random guy on the internet. So if you do lose your money, I don't want to be sued or anything. So I need to just disclaim, I'm not a financial advisor. You need to put your own research in and understand what you're doing. But this is just stuff that seems to make sense with me, and that's why I like documenting it and to actually go back and see my progress as an investor. So right now, my mindset is focusing on energy as well as healthcare and financials. I mean, it makes a lot of sense. In the energy sector, there's so much innovation going on. There's a lot happening. Oil is on the downturn while we have alternative energy booming, and that's where I'm looking to put my money mainly. And then healthcare, with the crisis that happened and everything, people need healthcare no matter what's going on in the market. Healthcare is something you can't get around. So I think that's another very sound investment. And when you look at the financial industry, I really think this is going to do extremely well because we've already bounced back from when the market was at lows. And it's looking pretty solid as we roll out a vaccine, as things are moving and the economy continues to progress. The financial sector can be more on the offensive. Right now, they're playing really defensively. If you look at the top 4 holdings, they actually have allocated a loss, so to speak, of more than $24+ billion, saying that if people can't repay their loans, they needed to take that into account. Now I'm saying that that is a ridiculous amount of money. That is so crazy to assume that you're not going to be paid that much money. This is hundreds of percentage greater than what we were seeing them allocate in 2019. So that's where I see the most growth, is that these people are actually going to be able to pay back the loans that they took out at a much more consistent rate than the financial sectors are looking at. So this money that's already been allocated for the balance sheet to not be incorporated in the business model is going to start shifting back over, and it's going to put these companies really even that much further in the black, profitable, and that's exactly what I like to see. So that's the 3 sectors that I'm looking at targeting in the near future here, and that's kind of my way of going about increasing that portfolio value. So if you guys did take anything away from this video, I'd really appreciate it if you click that like button. It helps me out, helps get my channel out there, puts it on other people's homepages, and it just shows that you enjoy the content that I'm making, and it makes me want to continue doing this. So thank you so much for checking out this video, guys, and have a great day.